Main risks associated with investing in SIFs are high volatility and market risk, as SIF often use advanced strategies like leverage and derivatives, making them more volatile than traditional funds and highly sensitive to market swings. Second, complexity and execution risk. The sophisticated strategies require deep expertise. Poor execution or incorrect market calls by fund managers can lead to losses. Third, credit and liquidity risk. Exposure to niche sectors and less liquid assets can make it difficult to exit quickly, especially during market stress. Fourth, limited track record. As a new asset class in India, SIF lack a proven performance history, making it harder for investors to assess potential outcomes. Next, higher fees. SIF may charge higher management and performance fees compared to traditional mutual funds, impacting net returns. Sixth, risk of mis-selling. Given their complexity and hype, there is a risk that SIF may be misrepresented to less sophisticated investors. Seventh, conflict of interest. Potential conflicts between fund managers and investors must be carefully managed to protect investors' interest. So, SIF are best suited for experienced investors who understand these risks and can tolerate potential losses.